Hello traders, and welcome back to the second video on my strategy. Okay, in this lecture we're going to be learning about the second strategy I use to trade the market, which is a market structure strategy. Okay, so I basically follow the trend. So this is gold, and as you can see we have the indicator we used for the last one. I'm just going to delete this indicator. Let's remove the indicator, and then let's analyze this based on the strategy. But first of all, let's look at the rules of the strategy, right? So I'm just going to close this one. I'm going to use this one. So these are the rules. So we have the analytical rules here, then we have the entry rules, we have the exit rules, and we have the trade management rules. Okay, now the first one, which is analytical rules, we have to identify the major trend of the market from a higher time frame. We have the 1 month, the 1 week, the daily, the 4 hours, depending on what you would like to trade. Okay, depending on whether you're a swing trader or a position trader or a scalper, depending on your style of trading. Okay, these are the higher time frames you might want to use. If you're a scalper, you will be looking at higher time frames of 4 hours, because you would like to enter trades on lower time frames like 15 minutes, right? So that's what you have to do. You have to identify the major trend of the market from a higher time frame perspective. So the higher time frame gives you an overall movement, an overall direction. It gives you a direction of the market. Gives you a direction. Okay, this type of strategy is quite complex because you have to have a lot of experience with charts. Okay, you have to have a lot of experience with market structure. It might not work out for you immediately, but with practice, with much practice, you tend to develop it. So you can start with the first strategy I shared. Okay, but for this one, I'm just going to also explain it so that you see how it works, right? And then we're going to see valid trades using this strategy. So you then draw what we call a trend line. Okay, you then draw a trend line. You have to find the direction of the trend, okay, by seeing as the market unfolds. Okay, if you see that the market is kind of making a lower highs and lower lows kind of pattern, you then know that the market is now on a downtrend, right? Then you then map out major and minor support and resistance zones. Okay, you have to map out these zones because they are very important zones, and the market tends to react whenever it reaches the support and resistance zones. Okay, so we have the major support and resistance, and we have the minor support and resistance zones. The major ones will be the ones on the higher time frames. They carry more power. Okay, they carry more power, and then the minor ones will be the ones on the lower time frames. Okay, then these are the next first three things you have to do. Then the next thing you have to do is you have to go on a lower time frame and find a trend pattern. Okay, so what do I mean by a trend pattern? A trend pattern is basically lower lows and lower highs, or higher lows and higher highs, depending on what the case may be. So you have to find a trend pattern and identify that, and then see how your trend pattern is reacting alongside your trend line, right? Then you have to use the Fibonacci tool to identify points of possible retracements and wait for prices to trade in that region. So with this type of strategy, you don't just enter anyhow, right? You don't always see entry signals, but you have to wait for the right entry signals. Okay, you have to wait for the right entry signals, which will play out when you wait. So you don't enter the market randomly. And then you have to identify points of high confluence between the Fibonacci tool, the support and resistance zones, and also your trend lines. Okay, you have to draw your trend lines. You have to identify your areas of confluence where these things meet. Okay, so if it's a retracement, if it's a valid retracement point, you will see that it falls on a 50% Fibonacci level or a 61% Fibonacci level, and you see that there are possible reactions at that level where you see multiple demand and supply zones or support and resistance zones, right? And then you see that it tends to have support on your trend line, tends to have support on your trend line or on a moving average, like 50 simple moving average or 21. But in this case, I don't use the moving average. If you want to use it's fine, but in this case I just use the trend line. Okay, and then you then have to use higher time frames to find candlestick pattern confirmations. Okay, so candlestick pattern confirmations are what we know as things like evening star patterns, the engulfing patterns, the inside bars, the doji, and what have you. So you have to find these patterns on higher time frames. You can actually find them on lower time frames too, but finding them on higher time frames tend to carry more weight, right? They tend to carry more weight on higher time frames. Remember, the higher time frame is the major direction of the market. It's the bird eye view. Okay, it's the bird eye view. So with the higher time frame, you tend to see what is happening in the lower time frames with less noise. Okay, the lower time frame is very noisy, but the higher time frames are devoid of market manipulations and noise. So when you find candlestick patterns on the higher time frames, you tend to see that the market reacts to them more easily. And then we have the entry rules here, and the first one is you enter trades on the 15-minute candles, on the 15-minute time frame, or 1 hour or 4 hour time frames. Okay, so these are the lower time frames we'll be using. And then you have to enter a trade only when price retraces to a 50 or 61%. This is 61%, not 60, retracement level. I change this. Okay, I can't change it now. So 50 or 61% retracement level, and closes above, which is for buy, or below, which is for sell, that level with a candlestick pattern. Okay, so we have to see a candlestick pattern at that level, and you also have to see a candlestick pattern on an upper level. Okay, and then for the third point, you enter more trades when a valid entry signal occurs, and if your trend is still valid, right? And if your current positions are at zero risk, it means if you are trailing your current positions or if you have them at break even. That would be the third entry rule. And then for exit rules, the first one is you place your stop loss below for buy or above for sell previous support and resistance levels. Okay, so you have to place your stop loss below or above previous support and resistance levels, and you have to take a take profit. You have to place a take profit of 3R, so 3 times your risk, right? Your take profit has to be 3 times your risk. And then your trade management rules, you have to take your stop loss to break even when profits hit 0.8R to 1R. Okay, when profits hit 0.8R to 1R, you have to take your break even, your stop losses to break even whenever your profits hit 0.8R to 1R. And then the last rule, which is a trade management rule, is that you have to trail the stop loss after profits hit 2R. So after profits hit 2R, you can extend your take profit to the upper side or the lower side depending on your position, and then just trail your trade with the trailing stop feature, right? Yeah, so these are the rules. If you can really articulate these rules properly and use them, you are sure to have close to 90% win rate. Yeah, close to 90% win rate, even though you will be waiting most of the time because you're waiting for the market to unfold. Okay, you're waiting for the market to unfold, and then you enter only valid trades. Okay, so this will suit you if you kind of have other things doing apart from trading. Okay, and you want to have some extra time. So especially when you use the higher time frames for your analysis and entry. Okay, so yeah, this will suit you if you want to have more time to do other stuff, right? So right now, we are going to go on TradingView to see how to practically analyze the market and use this strategy. Yeah, so here on TradingView, we have this chart on gold, right? we have this chart on Google, and I'm just going to analyze the market based on what I see here. Yeah, so I'm just now, as you can see, we are on the 1 hour time frame. I'm going to go on the 1 month time frame here and just drag this. So as you can see, Google has been on a clear uptrend for years, right? Since 2002. That's from the monthly. It has been on a clear uptrend. So that's why I said the higher time frames give us kind of a bird eye view. So the first thing I just did here is draw out a trend line. Okay, I connected all the lower lows and lower highs and whatever. Just connected them to the trend line. And here, as you can see, we have the market come here, test the trend line, go up, fall a bit, and then came and tested this trend line and continued up. And presently we see that the market is on a temporal downtrend. Okay, see that it's on a temporal downtrend and it's kind of coming down, and I suspect that the market will come down to this level. Okay, so first of all, what I will do is I'm going to draw out the support and resistance zones. The first thing I can do is I can use this tool. You just draw out the support and resistance zones like this in form of, I draw them in form of zones. Okay, let's clone this and just come and draw the major zones. Okay, so the ones you can see on the monthly. Clone. Okay, we can see this other zone here. You can see this one here and see this one here. So these are the major zones, right? These are the major zones, and markets tend to react to these zones very well. Just move this one up a bit. Okay. So starting from here, I think you figure out something very conspicuous on this chart, right? And very conspicuous, very visible, which is called a double top, right? So this is a clear double top. And you can see that this is the neckline. It's likely come down to this point, but of course it might not just it will not just rally down. It will play around. The market usually plays around, okay, before it tests this level. So the next thing I'm going to do is I'm going to look at if I'm going to look at the charts if I can see any candlestick pattern. Okay, what I can see here is a bearish engulfing pattern. For here, I can't really see any candlestick pattern, any reversal pattern. I can just see a valid downtrend going. So what I can do next is just come to my weekly and then see what's going on even more clearly. And what will I then do? I'll just take my trend line tool and then drag a trend line like this, right? Drag a trend line like this. And what next do? I go on my daily to see what's going on. So you can see we are starting from the monthly, and as you can see, the monthly gave us the direction and the daily. And okay, from the monthly we went down to the weekly and kept confirming things. Now we are in the daily time frame, right? And when we look at our rules, we see that we find trend pattern, and of course we've seen the trend pattern here. We find lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, right? Good. So the trend is downward. And then we use the Fibonacci tool to identify points of possible retracements and wait for market to trade in that region, right? Now, where was the last swing high? Take our Fibonacci tool, and this is the last swing high. Drag it down to the last swing low, and you can see here it is. Now, where did it fall? It fell at a 50% retracement level, 61 stroke 50% retracement level. So this tells us that the market will continue rallying down, right? So this has given us a clear view of where the market will keep going. And of course, from our monthly confirmation here, we have a double top, and from the principle of a double top, when it breaks this neckline and retest the way it just did, it might come to even create this much profit. So let me just take this guy here. I just measured the distance of the double top. It might just come to even give us this much profit, right? It might come to give us this much profit. So we might see the market trading downwards even to this level. So as you can see, I just used the basic principles of trend and everything we've been learning so far to analyze the market and tell us where the market will go to. So I'm just going to wait to see. Today is Thursday, tomorrow will be Friday, and if this week finishes as a bearish engulfing pattern, which I am envisaging, I'm seeing that it's going to finish as a bearish engulfing pattern already. You can see that it has engulfed the previous candle here, so it's probably going to retrace up to a level like this and close here, where we will then have a bearish engulfing pattern. It then tells me that the market will most likely keep selling. So all I will then do is just go on lower time frames, go on 4 hour, and just try to look for sell opportunities. Okay, so all I'll be doing now is just looking for sell opportunities. So I can take the trend line tool again and draw another trend line, a smaller trend line. Okay, so as you can see, we have the major trend line here. We could even have a bigger trend line on the higher time frame, but of course we have to draw another smaller trend line, the 4 hour tool, yeah, on the 4 hour time frame. Now come to 1 hour to see what's going on. So as you can see, now we have a clear trading opportunity. We have a clear trading opportunity. It's possible to enter a trade here and have our stop loss at a region like this. Okay, yeah, and we can also wait for it to retest or retrace and then enter a sell trade. You can see that after every retracement there is a continuation to the downside. You can see that after every retracement there is a continuation to the downside. Now if we drag it like this, we see that it fell, this retracement fell at the 50%, right? When we drag the Fibonacci tool from here to here, we can see that it fell at the 50% retracement. So this is just trading with market structure. You might need to go through a lot more videos to learn more about market structure, but basically when you attack the market from a higher time frame down to a lower time frame, you tend to get the bigger picture and the best picture. We can see a clear downtrend happening here, clear downtrend. The market will keep trending down to this point. I'm very sure of it, down to this point at least. It's going to give us this much. Now, how many pips can we make from this market? How many pips? Let's say we entered a sell trade and kept selling. We can receive up to 1,373 pips from this market. We can make up to 1,373 pips on this market. The market is going to move down to this point. Okay, so that's one thing, and that's just the way to analyze the market with this strategy. Okay, this strategy, it's more complex, but if you do it over and over again, you're going to get used to it. Now this is GBP USD, and if you come on the monthly, we can see a clear downtrend. Let's just delete you guys. Let me just delete all the drawings, remove drawings, right? Yeah. So from the monthly, we can see that there has been a clear downtrend. To the downside, right? And tested here and broke this. And funny enough, we can also see that we have a double top here, right? We can see that we have a double top. This is the first top, this is the second top, and the market kind of broke the neckline again. Yeah, the market kind of broke the neckline again. It broke the neckline, but funny enough, I haven't seen any valid retest here. I haven't seen any valid retrace. So probably this rejection of price here is because the market wants to come and retest this. So the market might be buying a bit. That's one probability. It can do another thing, right? So the market might be buying to this point, maybe, before continuing to sell. But no matter what, even at this point, the sell is still valid. It can keep going low. It can continue selling. Okay, it can continue selling. But that's the bigger picture right now. That's the bigger picture. So what we'll do here is to just wait for the market. Let's have this and see. Okay, as you can see, this is actually a 50% retracement level. So the market came down and retested 50%. So it's a possibility for the trend to continue. And we haven't marked out our support and resistance levels. But if we do, we will then see that there is actually no support or resistance level around here. The only one is maybe here. Okay. And actually the market tested it. You see why I spoke about major support and resistance. Now this is a major support, and you can see that the market came here and tested it and went back. So it's a very strong support and resistance zone. So for this for this, I won't enter any trade for now, but because I can see that there is a bullish engulfing pattern here and the market might want to rally a bit to the upside. So I'll just wait for the market. If the market breaks this level here, and keeps going up, I might start looking for buying positions, for temporal buying positions, okay, while knowing that the overall direction is a sell direction. But for now, I'll just keep waiting to see. So you see, this, like I said before, this strategy has to do with a lot of understanding of market structure. Okay, yeah. So you might want to go through the course over and over again. Okay, you might want to go through the course over and over again so as to understand market structure even better. Okay, so as to understand market structure even better, because that's what we're going to be using to trade with this strategy. So now, taking account of this double top break which we just had here, it means the market might be trading to this point. So the market might even reach this point. Okay, so this might be a temporary retracement, and then maybe the market will just retrace to a level and maybe create a minor trend line. Okay, maybe something like this. Maybe it might retreat to the minor trend line and then keep going down and probably retreat to the major one and then come and hit this level. It all depends on what the market does, but whenever I get a sell signal, I will be ready to sell the market. So that will be how this strategy will play out on a normal. So remember, the more practice you do, the more results you get, the more perfect you get. Okay, and with this strategy I've just shown you, you can actually develop your strategy. You can actually develop your strategy if you would want to use a strategy that best suits you as a person. Okay, so that will be it for this lecture on strategies. I just showed you the strategies and the rules. Of course, I'm going to make these files available to you so you can download and go through the rules for yourself over and over again so as to get acquainted with them. So that will be it for this lecture. In the next module, we'll talk about trading psychology, okay, and it's a very important part of trading. In fact, it's kind of the most important thing you have to get right. You understand? We have to talk about the trading psychology, after which we'll then use these things we've learned to trade the market. So that will be it for this lecture, and hope to see you in the next one.